Peter Gabriel and Genesis there. It's Morning Dave here. I appreciate you joining me every morning. I'm pretty much just kind of entertaining myself, but having company is so doggone nice. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And as part of the company I enjoy having on with me every morning is Phillip Statler from Statler Financial Services in downtown Sebring. So, Phillip, shall we start the countdown from 10 or from 15 as to when President Trump fires his Bureau of Labor Statistics head again, huh?
Well, here's what I will say is that they were very accommodative this morning when I was listening to CNBC and listening for the number to come across the ticker, that the number came across promptly on time.
Well, that's a good thing. It's just the number that sucks. We did get the non-farm payroll number in this morning at 8:30, and what we're not giggling, what's called gallows humor as much as anything. August jobs added across this country. We expected 75,000 new jobs to be added. The official report out of the government this morning is only 22,000. In the interest of job security for the Bureau of Labor Statistics said they did revise July upward, but then they knocked June back down by 27,000, so it shows a 13,000 job loss during the month of June, which is why I'm kind of counting the seconds down until President Trump fires somebody. How about you?
Well, I mean, the numbers are what the numbers are, and it is indicative of what we saw come across from ADP, right? So ADP showed us that there was going to be a slowdown in the jobs performance, and that's just confirmed today by the unemployment number.
Sorry, I had magpies in the hallway. I was closing the door there for a second. Yeah, it does kind of confirm it. The other number that comes out is we did what we were expected to do. The unemployment rate, the number that you're going to hear repeated over and over and over and over again all day at the top of the hour, 4.3%. That's like the highest number since the COVID pandemic recovery started. And while it's not good, at the very least we can say it's what economists were expecting. I was asking you what you thought the market was doing off of this on the futures because you've got the immediate tick level on it, and I still don't know. Did this virtually? And you quoted some guys on on CNBC this morning saying that it basically moves the odds of an interest rate drop in the September Fed meeting from like 86% up to 100%. And I'm betting the CME Market Watch tool is going to be saying the same thing, right?
Yeah, I mean, that's what they were saying, that, the expectation before this number came out was 86% chance that we'd see a 0.25% drop. And the economists there basically now are saying, based on these numbers, there's a 100% chance that we should see a 0.25% drop. And there's not out of the realm that we'll see some of the Fed governors talk about a 0.5 point.
I'll bet you I can name which Fed governors will be yelling for that, too. What do you think?
You probably can.
The same two that were whining about no rate decrease in the last meeting down the line. In retrospect.
But the other thing this brought to light was the October meeting, right? We got 3 meetings left, September, October, November. And so now the question is, is they're looking past September to October, and what will we see then? And I think they said that this increases the odds of a 0.25% rate cut in October to over 60%.
And that kind of what would end up being in the spirit of compromise, because as we were kind of half giggling and half predicting, the Trump appointees on the open market committee are going to be screaming for a 0.5 point rate cut. They already have on the rubber chicken circuit. Well, that communicates to the markets that we're in really deep doo-doo when they make that kind of a change. So the odds are against that. But at the same time, they may very well compromise and kind of shake hands on the notion of, okay, don't cause too much trouble with a 0.25 point this time, and next month we'll cut it by another 0.25. That actually sounds like something within the realm of maybe, well, the odds makers are saying probability. I'd say it comes within the realm of reason as well. Wouldn't you agree?
Yeah, and they also mentioned that it increases the odds that we'll actually see three rate decreases. Um, the one in September given, the odds higher in October, and there is still some slim odds on a November quarter point rate cut.
And the more crummy employment reports we see, the better the odds of the November as well will be. Other stuff going on this morning outside of a disappointing jobs report. There's a bunch of things going on as far as Federal Reserve related news as well. They had Stephen Moran, the nominee for President Trump, to join the Federal Reserve, and he had an interesting take. He said he's just going to take a leave of absence from the Trump administration, not really quit his job if he gets the job as a Federal Reserve governor. I'll bet that caused some consternation up on the dais, even more than I'm seeing in print. What do you think?
I think so. I saw several headlines regarding that. And so it is hitting the headlines, and it's not. I don't know if it's favorable or non-favorable. I haven't had time to dig into the meat of the articles, but the headlines give some cause for concern.
Yeah, even Republican John Kennedy of Louisiana, asked him when he said that, "What are you, Donald Trump's puppet or something?" When even a member of his own party, and a pretty staunch ally, goes in that direction, it got kind of a bullcrap detector alert out of the senators in the process. And yeah, he said all the right things. He promised that he would be independent from the administration, do all the right things as a governor, but it kind of probably is going to extend things out where he's not going to be in a chair before the next interest rate cut meeting.
No, it takes a little time, and the meeting's coming up on, I think, the 16th of September.
Yeah, it's flat out not going to happen. Goldman Sachs, we've been talking about the price of gold going through the roof. Goldman Sachs economists put out an estimate this morning saying that by the end of next year, gold could be up to $4,250 an ounce. I noticed we're at $36.41 this morning on the last tick I got. Boy, the old rules are starting to hit. When things are upsetting and things are unpredictable, gold was always a refuge that you went to as far as insulating your money. It's starting to actually behave like it again, isn't it?
It is finally, Dave, because it for so long it hasn't. But it seems like right now, at least in the circumstances we find ourselves, it is starting to act more now as kind of an inflationary or a safety net. But at least that's what it looks like right now.
Yeah, that was the rule of thumb for so many years, and then we went into that, 10 years of having just absolutely flat as a pancake gold prices. Now it's actually kind of behaving like, well, the old rule of thumbs would happen. Other things happening, too. I think this probably is anticipatory of a Federal Reserve rate cut. Mortgage rates are down to 6.5%. That's the lowest in like 11 months. If you can call that a prediction as far as federal rate cuts are concerned, that's an indicator, and it should be helping, I would think, next week's mortgage origination numbers.
I would think so too. But I will tell you, I know just from talking to a couple of my friends that are in the construction industry, not just here but over on the coast, things are slowed down in the multi-million-dollar home building business. The ultra wealthy are putting a hold on their construction right now. And so, we're talking about those guys are cash buyers a lot of times. And so they are holding off on their construction projects and building new homes and tearing down homes and building new homes. That was rampant for a long time, but on the coast, it's starting to slow down over there.
Well, when the cash buyers start pulling in their horns, that's kind of an interesting prediction of where they expect values to go. I've been talking on behalf of one of my real estate agent friends that advertises here. My home has pretty much been dead flat steady for the last year. I mean, it's been up 2%, down 2%. It's pretty much stayed stable. But when the cash buyers are saying, I'm not going to put money in, and they aren't even subject to interest rates, it makes for kind of an interesting prediction as to where home values are likely to go, doesn't it?
Well, not home values, but what the economy is going to look like over the next 3 to 6 months.
Yeah, understood. Net for this whole thing was yesterday. It was a pretty doggone good day on Wall Street. The Dow was up by 350 points, Standard & Poor's up by 54 points, NASDAQ up by 210. It was a pretty good day. When we get to the futures, I think we're going to see a little bit different picture based upon how Wall Street reacts. Do we have any companies that have been moving the needle at all this morning so far?
Well, we have had a few. Let's start with one of the ones you like to talk about every now and then is Lululemon. It didn't have a very good quarter, Dave, to put it lightly. They did beat on earnings per share. Pretty good, actually. They came in at $3.10 versus $2.88 expected. However, they missed on revenue, and they really came in and revised their full year revenue numbers down compared to what was expected, as well as earnings per share. And so that really hit them hard today. They're down almost 20% this morning.
Overpriced activewear. I would kind of expect that to be in the luxury category that might be suffering in a tight economy, but nobody likes seeing a publicly traded company go down.
Somebody told me the other day there are more and more competitors in that sector, and they are providing lower cost, better quality type things. And so that seems to be some of the indication there is that they may have a tough road ahead of them.
There's a piece yesterday saying that the rich are now going to Dollar General. Apparently they can buy yoga pants there too.
Yes, I heard that. Hey, the other one we had is DocuSign, a well-known company when it comes to digital signatures, signing real estate contracts, all that kind of stuff, has been a big deal for DocuSign. They had a good quarter. They came in at 92 cents a share versus 84 cents expected. Revenue beat as well. I think I saw where they actually upgraded their outlook for the quarter, for the full year quarter as well. They're trading up almost 7.5% this morning.
We'll take that happily. Resetting the table, it was an update on the major indexes yesterday. Must be hope springing eternal, with some really interesting economic news that could be reacted with either way today. Which way are we heading 45 minutes early?
Actually, we've flipped from a mixed bag of some red and green to all green. The Dow is barely positive, like $6, but we'll take it. The S&P 500 is up about 1/3%, and the NASDAQ 100 is up a little over 0.8%. On the other side of the coin, we've got silver rebounding from yesterday, up another 1% this morning, getting almost back up to $42. It's $41.84 an ounce right now. Gold's not far behind. It's up about 0.8%. And then crude oil is trading down significantly this morning, Dave, down almost 2.2%, $62.10 a barrel.
Yeah. I like hearing that news for a change. Something in red ink is good news sometimes. Looking overseas, the Asian Rim markets kind of recovered this morning. We're talking about 1+% gains, pretty much wall to wall in the Asian Rim, and one of the mainland Chinese markets was up almost 4%, meaning the president must have issued a buy order for somebody. In Europe, I've got green ink too, but not very much. The average European index midway through their trading day is up, trying to do a little averaging in my head, maybe 0.1%, but it is green, and that's good news. Getting a retirement plan together takes expert eyes to find all the hidden expenses and risks. How do I find you to be able to use your eyes to get my retirement unplanned, Phillip?
Then give us a call, 863-382-0037. Hey, before I mention the radio show, I do want to mention this. It is September. It is Prostate Cancer Awareness Month. And as somebody that has gone through that, I just want to give a plug for guys out there. Please don't just rely on your PSA. Go get an actual exam. It takes both of them to make sure that you don't have to deal with that. And then catch us this weekend on the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And as a a member of a family with a pretty heavy cancer track record, I'll second your emotion. Get tested for all the common cancers. Mr. Statler, I look forward to talking to you next week when we check in and see how we survived the weekend. Fair enough?
Fair enough, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Imagine for a
Folks, again, I want to thank you for joining us today. Have a great weekend. I look forward to speaking to you again next week. Bye now.